Hello, and welcome to Opinions AI News. Today we're providing an in-depth analysis of the escalating global economic uncertainty as of April 2025. Major international organizations are signaling a possible recession. The AI has processed the latest reports to bring you the critical facts, potential impacts, and most importantly, deeply considered solutions. The global economy is showing clear signs of a slowdown. The International Monetary Fund, or IMF, projects global growth at 3.3% for both 2025 and 2026, for the US 1.8%. However, they caution about differing economic paths across nations and downside risks. The OECD is even more pessimistic, anticipating growth rates of just 3.1% in 2025 and 3.0% in 2026. The World Bank's projection of 2.7% for both years is particularly concerning, as they state this level is insufficient to drive sustainable economic development, especially in developing nations. This paints a concerning picture. The world economy isn't just slowing, it's slowing to a point where progress for vulnerable nations is at risk. A major cause of this uncertainty is the surge in trade disputes, mainly due to newly implemented tariffs. In early April 2025, the United States enacted aggressive trade measures, including a broad 10% global tariff and duties up to 50% on goods from 57 countries. This significantly increased the average tariff rate on products from China. These aren't just numbers, they represent real costs for businesses and consumers worldwide. U.S. Federal Reserve Chair Jerome Powell has warned that these tariffs create unusually elevated uncertainty, potentially leading to higher inflation while slowing economic growth. It's a double-edged sword. Tariffs might protect some industries, but they also raise costs for everyone else. The World Trade Organization anticipates a weakening of global GDP growth due to this escalating trade war. Another critical factor is the high degree of policy uncertainty. In early 2025, the Economic Policy Uncertainty Index reached its highest levels this century. The New York Federal Reserve highlights that this makes it difficult for businesses to plan long-term. Consumer confidence in the U.S. has fallen to its lowest level in over a year, with the Expectations Index reaching levels often seen before recessions. When people are worried about the future, they spend less, further slowing the economy. Financial markets reflect this unease. The U.S. stock market has been highly volatile. The VIX index, Wall Street's fear gauge, is at levels not seen since 2023. And the price of gold has soared as investors seek safer investments. These market signals tell us that investors are nervous, and that can further destabilize the economy. This economic uncertainty has real-world consequences. A report by Actilent indicates companies are hesitant to invest or hire. Projections suggest monthly job gains in the U.S. could fall below 100,000 by mid-2025. The International Labor Organization emphasizes that millions remain trapped in informality and working poverty, especially in developing countries. The World Bank projects weak income growth in emerging markets, making it harder for poorer nations to catch up. The International Labor Organization highlights that millions remain trapped in informality and working poverty, especially in less developed countries. The World Bank projects weak catch-up in per capita incomes for emerging market and developing economies. Addressing this complex crisis requires bold, multifaceted solutions going beyond short-term fixes. Here are several key strategies. First, re-engineering global trade governance. The problem. The current WTO framework is ill-equipped to handle modern trade disputes, especially those involving non-tariff barriers and intellectual property. The paralysis of the WTO's appellate body further undermines its effectiveness. The solution. Establish a parallel multilateral trade dispute resolution mechanism involving key economic players willing to abide by binding arbitration. This could involve nations committing a percentage of their GDP to a fund that compensates countries harmed by unfair trade practices, thus incentivizing compliance. Second, targeted fiscal policies for inclusive growth. The problem: across developed economies, fiscal policies have often exacerbated inequality, with tax cuts disproportionately benefiting the wealthy. Meanwhile, developing countries lack the fiscal space to invest in crucial social programs and infrastructure. The solution: Implement progressive taxation policies, including a global minimum corporate tax rate to fund robust social safety nets, education, and healthcare. For developing countries, explore innovative financing mechanisms like debt for climate swaps, allowing them to invest in green initiatives while alleviating debt burdens. Third, strategic investment in green technologies. The problem: the transition to a green economy is essential for long-term sustainability, but requires significant upfront investment. The current uncertainty discourages companies from making these critical investments. The solution: governments should create public-private partnerships to de-risk investments in renewable energy, energy efficiency, and sustainable agriculture. This includes offering loan guarantees, tax incentives, and direct funding for research and development. International collaboration is vital to ensure that green technologies are accessible to developing nations. Fourth, enhanced labor market resilience and skills development. The problem: automation and technological change are rapidly transforming the labor market, leading to job displacement and skills gaps. The economic uncertainty makes it difficult for workers to adapt. The solution: invest in lifelong learning programs, apprenticeships, and vocational training that equip workers with the skills needed for the jobs of the future. Governments should also explore policies like universal basic income or guaranteed minimum income to provide a safety net for those displaced by automation. Fifth, strengthening international cooperation and governance. The problem: geopolitical fragmentation and a decline in multilateralism hinder coordinated responses to global economic challenges. The solution: revitalize international institutions like the UN, IMF, and World Bank, giving them greater capacity to address global crises. This includes reforming their governance structures to ensure that developing countries have a greater voice in decision-making, promote dialogue and diplomacy to resolve trade disputes and geopolitical tensions. The global economic situation demands bold and innovative solutions. By re-engineering global trade, implementing inclusive fiscal policies, investing in green technologies, enhancing labor market resilience, and strengthening international cooperation, we can build a more sustainable and prosperous future. What innovative solutions do you think are most promising? Let us know in the comments below. Don't forget to like and subscribe to Opinions AI News for more AI-driven analysis. Thank you for watching.